Hello there, everybody. Tim Knight here, Slope of Hope. It's quite unusual for me to do two videos in a row. That is, I did one yesterday and I'm doing one again today. But I just thought today warranted it. Because we are past FOMC day, thank goodness. It was a little nerve-wracking. Just very briefly, I did dare I use the word, my analog post this morning. And here's the real life chart. This is back in the 30s, as you can see. And as I said in the post, my view is that we are around here, where I'm pointing. I had hoped, not that long ago, that we were more like here. But as I said in my post, that nice sharp plunge, it seems to me, has already happened. And so what we've been kind of suffering through, this was sort of like, July, August, and so far in September. So I do think that we've got one dip upcoming, and then I imagine, should such a dip take place, that's when, as hinted so strongly today, the Fed will, the whole QE 2, 3, 4, and 5, cause a big rally, and that'll be kind of it. So still very much in the midst of this bear market, which has a few years left to go. So in our own modern time here, this is where we're at. And you can see how tough this was to read. This little squiggly area right here is a real bear to figure out what's going on. But that's the best that I've been able to do in terms of comparing one to the other. So there's that. In any case, let's take a look at the ES, which had its own gyrations today. Change this to maybe a 2-day graph. So, as is always the case, we had our FOMC EKG spike. So here's where it came out. And I suppose the very strong suggestion of yet more trillions promised by Bernanke got people excited, and so lifted things up, and things started to tumble. I'm pretty proud of myself today for how I handled this. Let me explain why. Let me bring up, the SPY tends to be kind of spiky. Yeah, doggone those data feeds. Let's try just the SPX instead. No, forget it. Let's go back to the ES. I just want to kind of explain what my thinking was today and how I dealt with this. I spent most of the morning, that is all this stuff, looking at charts because I had planned to beef up my number of shorts I've got in. And it took a while, and by the time we were getting pretty close to FOMC, I had my list. And I'm able to submit large numbers of orders all at once. And so what I did is I had my list ready, and I cut the quantity I wanted in half. And so before the announcement, I went ahead and submitted all my new shorts, but only half the size that I wanted, because I wanted to, were something like this to happen, not pay an overall rotten price for them. So playing a little bit safe. So got in here. By about here, I decided to jump into a big SPY position. So I bought a very large SPY position, and I know you don't believe me, but I sold it right about at the tippy top for a nice little profit, and executed my other half of those shorts. So the average price I paid for the shorts was kind of more in the middle here, so took advantage somewhat of that rise. So that worked out nice in two ways. A, made a nice profit in about 10 minutes time on that SPY long, and B, paid not too terrible a price for those new shorts. And so as the market sold off here, those started to do pretty nicely. So they ended up profitably, even though, I don't even know what the Indu closed at. Oh, it was up. So yay! So the Dow actually went up 7.5 points, and I ended up with a nice profit for the day in spite of being completely short, or almost completely short. So cool. Now, so what's next? Well, let me show you something that you're not accustomed to seeing much, which is the toss chart. And I've got here again the ES, and I'm, as I've talked about at length, starting to use a few indicators just for looking for broad turning points. And in the recent cycling we've been doing, as you can see, we've had these three big turning points where the McClellan falls beneath this upper red line, and the Fisher transform, the yellow dips beneath the blue. And in addition, up here, these Bollinger Bands have extremes reached. So we've got three instances here. So instance number one is right here. And as you can see, that was very nice, capturing the top there. And so we fell. And the next turning point at the top was right about here. Again, very nice alignment on all three of these indicators. And that was back on August 10. And then most recently, right about now is when this is getting very close to the top of the Bollinger. This is kind of wiggling above and below that line, and then we've done a cross here. And interestingly enough, I've drawn a trend line here showing how we've got a series of higher highs here. So it kind of makes sense to me, not only because of my analog, but also because of these indicators, for us to start to see some softness. Now, before the day closed, I mentioned I got a lot of shorts. In fact, I've got 188 of these things. But I did end the day with a new long position on the SPY. Not as ginormous as the one earlier in the day, but definitely big enough to take any sting out, because I'm really not sure what tomorrow is going to hold. I'm really glad we're past the FOMC stuff. That was probably the kind of event of the month, really. But just in case there's any sort of follow-through, pent-up excitement, I would like to be protected from that. But backing up, this is the 6-month spider. As everyone in the world knows, we've got this big inverted head and shoulders pattern, and as I've said over and over again, just like everybody in the world was watching the much larger head and shoulders pattern that disappointed the devil out of the bears back in July, I think this one has every bit the opportunity of disappointing the bulls right now. In fact, let's do a little analog here. This is to the bears, as you know where I'm going with this. This is to the bulls. That's our analog. That's a real analog, an analogy. So here is a breakdown below the neckline. Excitement, giddiness, thrills. Psych, up it goes. And once again here. I think it's going to pull the same shtick. And they're going to be PO'd when that happens. I'm imagined. Because the classic measurement of this sort of thing, and I've seen this in more than one blog, is for the S&P to pop to 1250. See that again and again and again. It's going to 1250 because of this thing. And I guess if I were to offer one reason why I don't think so, this isn't at the bottom of anything. I mean, do you really consider this I'll say again, do you really consider this a major downtrend? For God's sake? Honestly? Really? I mean, this is a major downtrend when you've lost, 40, 50% of the market. This is a burp. I mean, this is like a couple of weeks and there's nothing here. This is not a bottom, okay? It's not. Promise. Not a bottom. I probably said enough about that. That's it from me. I'm done for the day. I'm going to go pick berries now. So, God bless.